despite the fact that, we've got yields that are a little higher than what we've experienced over the past kind of 2 to 3 years. There's still, spreads are in good shape, and there's still a lot of demand in the investment grade market. I think this year there's been net inflows into the investment grade, into investment grade funds kind of most every week, since the beginning of the year. Still a lot of demand out there, and there's a lot of issuance to do. So that's a good thing. There's been M&A financing, which has been probably about maybe almost about 15% of kind of the issuance that we've had this year so far. There's also been, a lot of issuance by hyperscalers. You've also had issuance in the context of spectrum. Like as an example, you just had AT&T last week because they're acquiring EchoStar and that spectrum there. The other piece is around kind of the debt that was put on during COVID. You've got, kind of that 5-year debt is maturing. So, that in addition to, M&A financing and hyperscalers, et cetera. I was actually talking with our asset management arm, our fixed income asset management arm, Loop Capital Asset Management, and asking them how they think about this. As an investor, in the investment grade market, and otherwise, and how they think about it in the context of, hyperscalers and these really large deals coming to market. One of the things that, they focus on as an asset manager is because, kind of if you look at the hyperscalers overall, let's just say, they represent 6%, of the index, right? So you can't avoid participation. But one of the things that they try to do, and I think this is helpful for those issuers who are not hyperscalers per se, is you can't not focus on the hyperscalers, but it also gives them an opportunity to focus in on kind of the lesser visible names when they come to market. And so that's one of the things that they really try to do. And so I think, for those issuers who may be thinking, okay, the hyperscalers take all the air and oxygen out of the room, they can, be thinking about those asset managers that are looking at kind of in other places, right? And not just, kind of trying to go up against, a manager that's putting a $5 billion order in on a mega deal by a hyperscaler. So I think the point is that you can still get attention from investors, right? Because there is enough capital to be deployed. And so I think that's really helpful for issuers to understand that.